Welcome back, everybody. Ready for another deep dive?
Always.
Well, today we're looking at something that's pretty important for anyone following the markets, especially if you're interested in retail investing. We've got the stock market close and some really important economic data coming out.
Yeah, this is going to be a busy week
It really is.
because we've got like the big tech giants all reporting their earnings.
Ooh, yeah.
Microsoft, Meta, Amazon, Apple, you name it.
Yeah.
And those give us a window into how companies are using AI, what's going on with consumer spending, how is the economy really doing. And then on top of that, we've got fresh data on GDP, jobs, and that ever-important inflation. So all this stuff can actually have a real impact on your investment decisions, so it's worth paying attention.
Okay, so let's start with today's market performance. It felt like everyone was kind of holding their breath, waiting for more information.
Yeah, it was like a bit of a pause, right?
Yeah.
The S&P 500, the Dow, and the NASDAQ all closed slightly down. But, it's almost as if investors are saying, okay, we've had a good run, but let's see what these earnings reports and all this data tell us before we do anything too crazy.
Makes sense.
The thing is, though, all three of those indexes are still super close to their all-time highs.
Oh, wow.
So there's definitely some caution in the air, but it's not all doom and gloom by any means.
That is reassuring. But you mentioned tech earnings, and it definitely felt like the tech sector was on a roller coaster ride today.
Oh, for sure. Up and down.
These mega cap tech companies, they're like the stars of the show. Everyone's watching to see how they do because it can set the tone for the whole market.
Right. Right. Speaking of stars, let's talk about a couple of the big names, Microsoft and Meta. They both reported earnings after the bell today, right? What really jumped out at you from their reports?
Well, Microsoft, first of all, they beat those earnings expectations.
They had some really strong growth in their cloud computing business, which is something investors always love to see. And their shares actually jumped up in after-hours trading, so it seems like Wall Street liked what they heard.
Makes sense.
Meta, on the other hand, they also beat their forecast, but their shares dipped a little bit.
Yeah.
And you know what? I think it just shows how high the bar is set for these companies. Even exceeding expectations isn't always enough, especially when everyone's looking for those crystal clear signals of future growth.
So it's not just about the numbers, it's also about kind of like setting the right tone and expectations for the future.
Exactly.
And speaking of future-focused, I feel like Alphabet's earnings call yesterday was basically all about their huge investment in AI.
You're absolutely right. They kept highlighting their commitment to AI over and over again.
Yeah.
And the interesting thing here is that their spending patterns back it up. They really significantly increased their capital expenditures, and a lot of that is going directly towards AI development.
So, if Alphabet is pouring all this money into AI, does that mean good things for other companies working in that space?
That's a great question. So think of it this way. Alphabet needs those specialized chips to power all their AI stuff. And who makes those chips? Well, companies like NVIDIA.
Oh, right.
So if Alphabet's increasing their AI spending, that could lead to more demand for NVIDIA's products, which could be really good for people who own NVIDIA stock. It's all connected.
That's a fascinating point. It's not just about looking at individual companies, but also understanding how those ripple effects might play out. But let's not get too carried away with AI just yet. We also had some not-so-great news from another chip maker today, AMD. Their stock actually dropped, even though they met their earnings expectations. What happened there?
Yeah, that one was a bit of a head-scratcher. It seems like investors were a little bit spooked by their forecast for future revenue, which was a tiny bit lower than analysts had predicted. So maybe there's some worry about demand for chips softening down the road, even with all the excitement around AI. It's a good reminder that even in a strong market, there are always going to be some companies facing headwinds.
Okay, so we've got some mixed signals from the tech world. Let's shift gears for a minute and talk about the broader economy.
Sure.
We got the latest GDP figures today, which give us a sense of how the overall economy is performing.
Yeah. The GDP grew by 2.8% in the third quarter. Now, that sounds pretty good on the surface. It means the economy is still expanding. But it was a little bit below what those analysts were expecting, so there's a bit of concern that maybe growth is starting to cool down a little bit.
So it's not just about the number itself, but how it measures up to expectations.
Exactly.
And what about the jobs report? That's always a big one for investors.
Oh, yeah, for sure.
Like everyone's watching that.
And we actually got 2 sets of jobs data today. So the ADP report, which focuses on private sector jobs, that one showed stronger than expected job growth. But, you know, the non-farm payrolls report that's coming out on Friday, that's the one everyone's really, really watching.
Right.
It gives us a much more complete picture of the whole labor market, and that's going to be a key factor in how the Fed decides on interest
It's
rates.
like so much data, so little time.
I know, right?
And then tomorrow, we've got even more coming out, including the PCE price index, which, as I understand it, is the Fed's favorite way to measure inflation.
Oh, yeah, the PCE. It's the inflation indicator that keeps everyone on the edge of their seat. Analysts are thinking it'll show a slight decrease in both headline and core inflation. And if that happens, it might give the Fed some breathing room when it comes to those interest rate hikes.
Right.
But if inflation comes in hotter than expected, well, let's just say the market might not be too happy about that.
Right. It feels like we're at a crossroads, just waiting for more clues from those corporate earnings and the economic data.
It really does. It's like the climax of a financial thriller. We're all just on the edge of our seats waiting to see what happens next.
I don't know if I'd call it exciting, but it's definitely keeping us on our toes.
All right, so let's try to break down all this information that's been coming at us.
Yeah, it's a lot to digest.
It is, but remember, you don't need like a PhD in economics to make smart investment choices.
Oh, that's good to hear. So, what are some key takeaways from today's market action that our listeners should really be paying attention to?
Well, one thing that keeps popping up is just the sheer dominance of AI.
Yeah.
It's clear that companies like Microsoft and Alphabet, they're going all in on this technology, and investors are definitely taking notice.
Right. Alphabet's increased capital expenditures for AI, that definitely stood out to me. Is that something that we might see more of from other big tech companies?
It's very possible. Remember, those capital expenditures, they send a strong signal that Alphabet's really confident in the future of AI. And other companies might feel the pressure to follow suit, especially if they don't want to fall behind.
So, for investors who are interested in getting into the AI space, what should they be looking for when they read these earnings reports?
That's a great question. It's not just about hearing the word AI a bunch of times. You really got to dig deeper. Are they actually integrating AI into their main products and services? Are they seeing real results from these investments, like higher revenue or more efficiency? And keep an eye on those companies like NVIDIA who make the chips that are essential for AI.
Right.
Their performance can be a good indicator of how well the AI industry as a whole is doing.
Okay, so look for the hard evidence, not just the buzzword.
Exactly.
Makes sense. Now, let's talk about the other elephant in the room, inflation.
Yeah.
It's still a big concern, and, those upcoming data releases could really shake things up.
Absolutely. Inflation, it's like the wild card right now. It's the main reason the Fed has been raising interest rates.
Right.
And what they do next is going to depend a lot on what that PCE data tells us tomorrow.
Higher interest rates, they're kind of a double-edged sword, aren't they?
Yeah.
They can help bring inflation down, but they can also slow down economic growth.
Exactly. It's like this balancing act for the Fed.
Yeah.
And that's why the market is so sensitive to every little piece of economic data right now. It's trying to figure out where things are headed.
Right. We were talking earlier about how Treasury yields have been going up, which usually means that investors are expecting higher interest rates. How does that play into this whole inflation picture?
That's a good point. That rise in Treasury yields, it's definitely reflecting those expectations. Investors are watching for any hint that inflation is going to be stickier than expected, which could force the Fed to keep raising rates. So you've got this tug of war going on between the signs of economic strength, like that strong ADP jobs report, and those worries about inflation sticking around.
So for our listeners who might be feeling a little bit overwhelmed with all of this information, what's the best way to navigate this crazy landscape?
Don't panic.
Okay, good.
You don't have to be some financial guru to make good investment decisions. Focus on understanding the companies you're interested in. What's their business model like? What advantages do they have? What are their long-term growth prospects? Do your research. Read the earnings reports. And listen to podcasts like ours.
Right. It's about tuning out the noise and focusing on the things you can control, like your research and your investment goals. Speaking of tuning out the noise, there was one data point that I found particularly interesting. That surge in pending home sales in September.
Oh, yeah.
Yeah.
That was a bit of a surprise in the housing market. Those sales numbers jumped up a lot, probably because mortgage rates went down a bit.
Right. But mortgage rates have been going back up lately, so I'm wondering, is this like a real turnaround in the housing market or just a temporary blip?
It's a really good question. And it just goes to show how much uncertainty there is across the board right now. It's a good reminder that staying informed, it's an ongoing process.
Absolutely. And on that note, we've got more companies to talk about. From payment processors to pharmaceutical companies, there's a lot to unpack.
Okay, let's zoom in on a couple of specific companies that really caught my eye today, starting with Visa. Their stock price jumped up after they beat both earnings and revenue expectations.
Yeah, Visa's always interesting because they're so tied to consumer spending, right?
Right.
And what they're basically telling us is that people are still out there swiping those cards. Their payment volume had solid growth. That's a good sign for the whole retail sector.
That makes sense. If people are feeling confident enough to keep spending, it suggests the economy might be a little more resilient than some people think, even with inflation still hanging around.
Yeah, it's definitely a data point worth noting. And you know what? That positive sentiment seemed to rub off on MasterCard too, because their stock price also went up. So good news for the payment processors. But not every company had a great day. Eli Lilly, the big pharmaceutical company, their stock actually took a hit after their obesity drug sales missed expectations.
Yeah, that was kind of surprising. You'd think healthcare, especially a company with a drug for a growing health issue, would be a little more shielded from the ups and downs of the economy.
Hmm.
But I guess it just shows that even in a sector that's supposed to be stable, there are still those company-specific factors that can really make a difference.
Right. And they also lowered their earnings forecast for the year, which probably didn't help things. It just goes to show that even in a strong market, there are always going to be some winners and some losers.
And speaking of companies that are facing some challenges, Intel's reporting earnings tomorrow, and they've had a pretty rough couple of quarters.
Intel, yeah, they're an interesting case. They've got all this competition in the chip market, and they're really trying to get back on track. Investors are going to be looking for signs of a turnaround, especially with demand for chips expected to stay strong, with AI and all these data-hungry technologies. It feels like they're at a real make-or-break moment.
It does.
And we can't forget about the two giants we haven't even talked about yet. Amazon and Apple, they're both reporting tomorrow. And those results could really move the market.
Oh, yeah, absolutely. Those two, they're like the foundation of the whole tech world.
Mm-hmm.
Their performance can tell us a lot about everything: consumer spending, cloud computing, supply chains, you name it.
Yeah. I think it's safe to say everyone's going to be watching closely when those earnings reports come out. Well, this has been a wild deep dive,
It has.
but I feel like we've covered a lot of ground,
We have.
from big market trends to what's going on with individual companies.
The good, the bad, the uncertain. It's all out there. Hopefully, our listeners are feeling a little bit more prepared to make sense of it all.
Exactly. It's all about empowering investors with the information they need. So as you keep up with the market this week, take some time to think about those companies you're interested in. Are they innovating? Are they adapting to the changing economy? Do their long-term plans match up with your investment goals?